All right, day 35 of my journey to a $500,000 stock market portfolio. So today was a crazy day, Friday, October 25th. Let's start with my equity first. So in my TFSA right now, my equity is sitting at 57,304, 75.42 in my margin, and 17,569 in my RSP. That's a total of 82,415. All right, so I had 4 earnings trade yesterday. So let's talk about the earnings trade first. They're quite interesting. So I did one on Verizon, Visa, Amazon, and Capital One. So Verizon, I did an iron fly, sold it for $108, and I closed it today for $74. So the profit is the difference, a small $25 profit. In fact, if I were more patient, if I held onto it longer, probably could have received a bigger profit, because I think right now Verizon is trading at 60.3 and my short strikes were 60.5. So I could have closed it for about $25 actually. So I would have made a $75 profit. But of course I don't know that. And because I'm always a little scared to lose money, so I tend to close the earnings trade quickly. So that's with Verizon. Now for Visa, it was also an iron butterfly with a 175 short strike. I sold it for $3.58, but then I closed it this morning at $2.50. So I made a profit of about $108. Amazon was an iron condor, and I needed Amazon to stay above 1710 or below 1850. Now, because I reacted quickly in the morning, I ended up closing it for break even. So I sold it for $108. I closed it for $100. So I made a small $8 profit. But if we look at Amazon right now, if I had held on to it, if I had held on to Amazon, I would have kept all the profit. I would have kept all the credit that I received. But of course, I saw Amazon after hours yesterday almost at 1610. So I didn't think Amazon had a chance of staying above 1710 this morning. But if I were just more patient, would have gotten max profit out of Amazon. And then Capital One, sold it for $250 yesterday and closed it this morning for $150. So Capital One and Visa were my biggest winners. Basically, they compensated for the others. Although the others were not losers, but after commission, they weren't really profitable. But all 4 earnings trade combined gave me about $200 of net profit. So it was a very stressful morning, but ended up being profitable. Could have been more profitable for sure if I was just more patient, but that's just my strategy, because I'm always scared that it goes against me. So let's talk about Tesla. Ridiculous Tesla. It makes no sense whatsoever. 328, unbelievable. Look at this. Look at this. Doesn't make sense. So after earnings, it jumped up. It jumped up a lot. It jumped up 3 times almost expected move. Not only that, the next 2 days it decided to go even higher. Today alone, it went up 28 points. So when Tesla was trading at 307 today, I decided to sell a call spread at 330 strike. So I'm assuming that Tesla's not going to go above 330 come November 15. I think I went with November 15. Yeah, November 15 expiration date, I went with a 330 strike. I collected $100. But now I placed a trade when Tesla was trading at 307. So I gave myself some room, almost $25 of breathing room. Obviously, I don't know that. I had no idea that Tesla was going to jump even more. And now it's already at my short strike. And see, I collected $100. If I wanted to close it, I would close it for about $230. So already today, I'm losing $130 on this Tesla trade just because it went up all the way to 25. Just because it moved up from 307 to 328 in the same day. But I expect it to drop. I don't think this is going to continue. I think there's something weird about this. It can't be real. It has to be fake. It has to be short term. So one way of managing it is, I guess I can close it for a loss and then pick a short strike that's a bit further. For example, 350 or 360. Now I'm going to obviously do that for a debit, but I can change my expiration date. I can go maybe November 22nd or even further, November 29th, to collect a higher credit from the new strike, hopefully compensate for the loss that I'm going to occur by closing out this trade. Or what I could do is I can sell a put against this, collecting a credit from selling the put side. And then this way I'm just reducing my max loss. I accept that I'm going to lose on this trade, but instead of losing, my max loss on this trade right now is $400, but instead of losing max loss, I can collect something from the put side, probably another $100 or $150, and then my max loss would be $300 or 350 or 250. But I'm going to give it time. I think next week it's going to drop, although it's ridiculous. It looks like it's going to hit my short strike today, that's for sure. But I don't think I want to manage it right now. I'll give it some breathing room. I still have 2 or 3 weeks. I have 3 weeks. So obviously the market is going up like crazy today. So I decided to sell some calls. I don't think it's going to go even higher. Markets don't crash up. So I decided to sell an SPX call spread for December 20th over here, 31.40. I picked a 31.40 strike, sold a call spread, collected $80 on that. So I've got 56 days to go on this trade. Obviously, I don't plan on waiting till expiration. As soon as I can close it early for at least half the profit, I'll close it early. But I made this trade assuming that markets don't crash up. Today we had a rally up. I don't think we're going to continue having rally ups. Eventually it's going to have to come back down. So that was my assumption there. Did the same thing with the Qs. December 6th, sold at 203 strike, collecting about $84. I placed an iron condor on the Russell 2000, expiring December 6th, so about 42 days out. Collected $160. I also sold a call spread on NVIDIA at 212. I already have one at 210. Now I have one at 212. I also had one at 202.5. But that one's in trouble today for sure because NVIDIA went past it. So I'm trying to collect more premium to compensate for the eventual loss I'm going to have on NVIDIA when I close it. So if we look at the NVIDIA call spread that I have here, November 8, 202.5. NVIDIA is at 204.5 already. I still have until November 8, but as you can see, it's already 3 times the credit that I received. So normally my strategy is to close it at 3 times the credit received, instead of going for max loss and then selling something else to compensate. So I already sold the something else, which was another call spread, same expiry, but different strikes, of course, collecting, I think, $90 or $100, $90. But I have a feeling it's going to come down. I mean, this is not real. This can't be real. So I think it's going to come down. So I'm going to wait a bit. Or what else? The other thing I could do is sell a put spread against it. I could even, if I want, I could sell a put spread here. I could sell a put spread at the exact same strike. This way I'm basically accepting a loss on this, but I'm going to be reducing max loss by a lot. So if I sell a 202.5 here, November 8th, if I sell a 202.5 strike, put option, sorry, and then buy the 5 points away, so 197.5. Same expiry date, of course, November 8th. So let's remove the call. So sell the 202.5, buy the 197.5. I could collect about $160. So I already collected $88 from this NVIDIA call that's in trouble. And then I can collect $160. My max loss is $500 minus what I collected. So this is one way of reducing my max loss. But then obviously I have a small chance of being right, because for me to win on this trade now, NVIDIA has to land at exactly 202.5 come November 8th. So I'm basically accepting loss, but I'm trying to reduce max loss. So that would be 500 minus 88 minus 160. So I'd be losing $252 if I were to make this adjustment, leaving the call side as is, but selling a put side exactly at where the short call strike is. Or the other option is to close the call side completely, take that loss. Basically, my loss in this case would be $260 minus the $88 that I already collected. So 260 minus 88. So my loss would be 172. But then I can go ahead and sell something else to compensate for my $172 loss. So there's different ways of adjusting. It really depends on your assumption of where you think the stock is going. But I'm going to wait it out till next week, maybe even after Wednesday, after the Fed announcement, because I think this is a bit exaggerated. I don't want to react to something that is exaggerated. I sold calls because I think it's gone up enough. It should not go above that price this fast. So that's why I sold another call at 212. I have one at 210 as well. I could be really unlucky and NVIDIA shoots up to 220. And all these spreads will be in big trouble. But for that, it's very unlikely. So that's why these are called high probability trades, because it's very unlikely that NVIDIA shoots past 220, because it already, first of all, earnings is coming out after November 8th. and it already went up from 170 to 204. I think that's enough. If we go back 3 months, 150 to 204, I don't see it going from 150 to 220. But as long as I keep an eye on it and make the necessary adjustments, sometimes there'll be winners, sometimes there'll be losers, but you want to reduce the losers. You don't have to achieve max loss on these credit spreads. So I still got my Boeing put credit spread at 300. Just thinking of closing it. Could close it for around $30. Collected $80 on it, so it gave me about $50 profit. But I'm going to hold on to it, try to get max profit on it. MasterCard is expiring today. This one's going to be 100% profit. So I still have some credit spreads on the Qs. I've got a call at 199. This one's in trouble. It's showing me a loss here, but I still have until November 22nd. So that's kind of the advantage of taking a long period, is that you have time to make adjustments. The Q, it might easily drop back down before November 22nd, in which case I can close the trade early. I don't have to wait till expiration. So this one is the new credit spread I made today. This is an old Iron Condor, November 29th, still have time. It's actually showing me a profit. That's funny. Roku is a call spread at 160. Roku's at 133 right now. I have a bunch of credit spreads on the Russell 2000, 1, 2, 3, 4, 4 of them. Some of them have good call spreads that will most likely expire worthless. Same thing on the put side. The newest one I have is this one here, December 6th. So 1620 call strike and 1470 put strike. But I have a lot of time. It's probably 40 days. And I've got some SPX calls that should expire worthless as well. I'm a little bit worried about this one here, the 3050 call, November 15 on the SPX. I mean, the SPX is already at 3023 and my short strike is 3050 and I've got 3 weeks to go. So the SPX has a good chance of going over 3050 by November 15. So I might have to make adjustments on this one here, either by closing the whole trade early and putting on a new trade further out, or maybe bringing the put side to 3050 and reducing my max loss in the case it happens. So let's see what happens if I bring my put side all the way up to 3050. All right, so if I bring my put side all the way up to 3050, so sell the 3050 put, buy the 3045 put for protection. So if I do that, I could collect about $295. That's actually pretty good for November 15. If I bring the put side up, I already collected 689 minus 605 plus 3120 minus 3035. So I already collected $169 from this Iron Condor. I could bring the put side up closer, collect an extra $295. My max loss come November 15 for closing this whole trade out will be $500. So I could make this trade so that this Iron Condor gives me a max loss of $36. Now, if I bring up my put side to 3020 or 3050, should I close this put side? If I close it out, then I have to consider paying for that. So closing it will cost me about $30. So it's not bad actually. So I can make this adjustment right now, bringing the put side up to the call strike, so that my max worst case scenario, I would lose about $65 on this trade if I'm really worried about the 3050 call. So these are some adjustment ideas I can make, but I won't do them today. I'm gonna wait till next week, but definitely keeping an eye on them. And in my TFSA, I ended up rolling over the call option on the Qs. Quite disappointed because 2 days ago, I think on Wednesday, I had a chance of rolling it over for an extra $100. Today, because the Qs went up like crazy, I ended up rolling it for only $50. So half the amount was lost because I didn't roll it over earlier because I was greedy. I felt like I could get $150 if I wait till Friday. So yeah, it's still $50, but definitely got to stop being greedy. No earnings trade for today. I'm gonna take a break. I feel like I have a lot of trades to manage. I've got Tesla that I have to manage. I've got this SPX call spread that I have to manage, and maybe this and Nvidia, of course. I've got 3 trades really that I have to manage next week, so I don't want to add more stress on myself for now. So that's basically it for day 35 of my journey to a $500,000 stock market portfolio. So if you have any questions, leave them in the comment section below. Like always, if you're going to open an account with Questrade to trade on the stock market, use my referral code in the description below the video to get up to $250 back. Thanks for watching.